So Single Finance is one of the more innovative platforms and protocols that I've found lately. It allows you to do delta neutral strategies, which protect you from the downside and the upside. Kind of got to stay between a certain threshold, and you make a really solid APR, APY. And I think it's one of the things that we definitely need to dive a lot deeper into. And we will do exactly that in this video. And if you stay till the end, I'm going to show you some really awesome stablecoin strategies Single Finance has hidden within their protocol, and we'll maybe jump into a little bit about their time machine, which is the first time I've ever seen anyone doing previous history on yield farms across most of DeFi. So very innovative platform, and it's on Chronos, so no one's really using it. What's up, everyone? My name's Evan. I'm with Crypto Cash Camps. We talk all about making passive income in the DeFi space with the goal of getting 1,000 of you to make $50 a day passive income in a safe way. Blue chips, stables, some really solid farming tactics. So if that sounds like something you want to get deeper into, check the link in the description. I've got a big course we're building out, different modules, all sorts of stuff, everything you need to get started and going and moving. And get a lot of alpha too. So if that sounds like something you're interested in, click the link in the description. If not, just like the video. Really helps out the algorithm. And hit the sub button if you want more up-to-date content. I release videos 2, 3, 4 times a week, so check it out. All right, let's just get into this. Enough of me talking. Okay, pseudo delta neutral strategy. So let's just quickly tell you what pseudo delta neutral. There's no delta neutral because as soon as the coin you buy or the token you buy changes, it becomes not delta neutral. So pseudo is more or less you're protected. And I need to show you a graph to explain this. So quickly to show you what this looks like is this is in their white paper, Mechanics of Pseudo Delta Neutral Strategy. If you want to understand it better, please read this. It's not that hard to read, but I'm going to go over just a quick explanation because it would just be so boring if I just read this to you. So Neil is delta neutral. He is blue. Let's check out Neil. Neil is blue, so he loses very little on the downside and the upside, but he's just farming the whole time. So he's making 100% APR and losing, 5% or 10% if it goes up or down too much. However, this green guy, Michael, is just long farming. So if it goes up, he's doing great. If it goes down, he's doing bad. And then Buzz is more or less going after, he's shorting this one pretty much. So he's not doing too good if it goes up. So if it goes up, he's not doing good. So it's like you got a long short, and you see delta neutral is great because unless you're a magician, you don't know if the market's going up or down. So let's just go for delta neutral. Okay, what does this company have in terms of audit? It has a CertiK audit, super expensive. They paid for it. They've got some VC backing. So they have all the criticals resolved. One of the two majors. So if you like CertiK, it's just, makes you feel a little better. And let's see, maybe there's something else on the white paper on who invested. There is a bunch of investors, so just know that people have put some time and energy in this. This is actually a pretty complicated build, so let's go into this. So we are starting with strategy and go down. There's 3 different tokens. We got a single, their native token, Crow, a little more stable, it had a big swing, and then VVS, like a relatively worthless farm token. All right, let's check VVS, all time. It looks flat, right? So you don't want swings more than 50% when you're doing delta neutral yield farming. I'll show you the chart later, but let's just show like right here. Let's just do 3 months. Say we bought over here at, where did we bought at the top? It was 0.0004. So if that goes down to 0.0002, it's lost 50%. We're in trouble. Yeah, so there, from the high to low, it goes down 0.0002. So maybe here in the middle, you could be protected. Who knows? It's a little high risk for me. Single finance is even more volatile. Like, look, you're up here. You bought it at 20 cents. It goes down to 12 cents. You're almost liquidated there, or your stop loss protection jumped in. Same here at 10 cents. It goes down to 6. 50% drop. Your also stop loss is triggered. So, you want something that's a little more, this doesn't do you much better, but just know after this price jump, it's kind of leveled. So say you got a top of 64 cents, a low of 33 cents, a higher high of 90 cents. So that's the thing you got to be worried about if there's another pump up like that. So 72 to 33. Let's just say if we did 80 cents to 33 is like kind of the threshold. So let's just use those numbers and dive in 80 to 33 and then dive into this to show you liquidation thresholds and how you make money with this. This is the badge that makes this place interesting. Here's the badge, 90% capital protection. Check that out. No one does that. No one has this badge. It's really interesting. And pretty much it's just a fancy way of saying stop loss. Single click. Let's do this. You want to do 10 bucks? Too bad you can't. You need to do 200 bucks. I don't know why. 201.22. They want you to do that because they're going to charge 10 bucks a gas because Kronos is not cheap. Gas is expensive. Not ETH expensive, but it's expensive. So if we're doing 3x leverage at 90% stop loss, you're going to see how tight the liquidation thresholds are. And remember, you want to be within this area where Kronos is between 23 cents and 62 cents because then you're not losing any money. But as soon as you get past a point where Kronos is below 60 or above 62 cents, you're going to be losing a little money up to 72. So that's something to, be aware of. However, if you were to crank down, your loss area, say it's 62, what if we bring this down here? When do we start being in the negative? 65. So it's not a whole lot of a difference. I think you're pretty protected. 20 cent crow is not financial advice. Let me tell you that. It's not super possible anytime soon. Could be. No one could like it. They could stop marketing, something like that. But remember, you're getting 66% here. And then when you crank it up, you're getting 99%. And remember, your stop loss, like when it sells off, it's going to be, as soon as you lose 10%, sold. But that whole time you could be farming. Like it could be swinging between these two, left, right. And you're making that fat 99%. But as soon as it hits that stop loss, you're calling it. You're done. You still are making your gains, but the principal balance, the equity that goes into it, will be taken out. And what they're actually doing is they're doing a lot of compounding of the fees, but then your actual single token you can claim separately. So you want it to stay within this threshold. So just be comfortable of being in a threshold. So maybe 77 to 15. Well, maybe if I want 80 something percent on my liquidation, 86, that would be a good side. Maybe we could crank it to the middle of these two. I know I'm getting into this, but this is really what you have to do to find your comfort level. 85. I like 82. Let's get this. I want to get, if I get to 80% here, what would be my rate? 80. Okay, there you go. And 81. 81. Okay. I could be comfortable with that at liquidation rates. And then 68 cents is when I start getting into the negative, which is fine. But we're just here to double our money, more or less. But, a year is a long time to keep money anywhere. So what you do essentially is, since we're only at 2x, 2.43, we're supplying this amount, we're borrowing this amount, our position is 488. That's why you make such good gains with this. All right, so now we're going to actually be a little more advanced and click the Advanced Simulator. This just gives you a little bit more data. Farming APR, borrow APR, they're auto-populated. And if you wanted to, you're like, you know what, I think I'm going to do this for 90 days. Then you're realizing that your stop loss is 83% up here, or 83 cents, and the downside is 16 cents. So that's kind of comfortable. And then you can actually, I wonder if you could supply a little bit of crow as well to kind of lower your risk. So let's supply like 100 crow, but it's still just, 83. See if it changes anything. Doesn't look like it changes anything because they just divvy it out that own way. So just know your liquidation on the upside and the downside, and are you comfortable with losing 10% or 15% while you're farming on the way up? And a good way to think about that is if you're making 80% How long does it take for 80% to give you 15? We can do that calculation right now. All right, so this is the 80% divided by 365. And what you get is a number that they're not telling you. Okay, 0.21. So you're making that much per day, and you multiply that, or you divide that by. So it's actually 71 days. That's a lot of time. I don't know if I like that. So you need 71 days to be able to pay back 15%. Uh-oh, we're not here. So that does seem a little risky. So maybe when you stay within the 90%, it gets you a little more comfortable. I would say that. And 77 cents probably won't happen too soon, but it could. So yeah, just know that and be aware that there is some downside risk to this, and assess your own risk. But when it is only a 90%, you can only lose 10%. It makes you feel a lot more comfortable. We can lose 10% so quick on so many other ways. And to tell you about their fees right here. If the stop loss hits to save you, they're giving you 1% of principal, which is a lot. And then this is 19% of the return. They want that as a fee. So if you see a fee, it's like looking at 100%. Well, you're going to be really making 80%. Just know that they are taking a good chunk out of it. So to me, this seems like a super interesting protocol. And kind of get in where you feel comfortable. Remember, this isn't the only protocol that's available. There's also a couple more. Francium's on Solana. I know this looks really complicated, I know. But just know that there is, what you can do is like do Solana with USDC in a delta neutral strategy, delta neutral farming. And what you're seeing that if, the stop loss is 55 for Solana and 180. So if you think it can stay between those two, you're doing pretty good. And you could be making a wicked 133%. So just to let you know, this isn't the only delta neutral strategy available. There's some on Solana, Francium, Tulip. But check it out. I think if anything, you should start looking into delta neutral strategies and understanding them a little bit more. Read the white paper. And I do want to quickly finish with showing you some stable strategies in terms of, you have some USDC and you want to make over 20%. Do you want to beat Anchor? Go to lending. Go to USDC right here, and they're giving out. This takes a little while to lend, but it's 21.9 or something like that. I'll just show you. Let's pause this. There you go, 21.75. That looks pretty good. Looks really good. Okay, so that is the amount that you can make there. Great amount to have. All right, awesome. So now what? What else can you do? Well, you can look at their LP time machine. So LP, liquidity position, liquidity pool token, and you can look at all these different exchanges and see their historical amount of money they have grossed out. They don't give you an APR, they give you an amount made over a certain period. So say you want to check out Avalanche. They only have Trader Joe's as the DEX, and what you do is you just go down here and you see what was the highest 90 day. Oh, that's the lowest. The highest 90 day is unlisted. Okay, some things aren't 90 days. Wow, so DAI and, Wrapped AVEX and DAI is looking pretty good at 21%, 30 day. But, you're also looking at the underlying token return, including price effect, yeah. So that's how much you're making with the price effect. And price effect is not as much what you're interested in. You're also looking at the actual trading fees, like what's actually paying out well. This site is new. It's kind of in beta. You can feel it. So yeah, I'd be looking at these numbers: trading fees, yield farming, and price effect is not as important because that's just something you're dealing with. So yeah, keep looking. I mean, you can look at all these chains. Ethereum's coming, Polygon's coming, and you can just click Discover All. So I find this very cool tool. So yeah, with that being said, thanks a lot for watching. If you're interested in getting deeper into yield farming and making $50 a day passive income, check the link in the description. If not, hit the like and subscribe, and I will see you guys on the next video.